Welcome to Tech Behind It. My name is Tuhina, and today we're going to talk about education. Africa is going through a youth boom at this point of time. 130 million young adults will be added to the total population of Africa by 2050. It is growing by 68%, fastest in the world. But what does it have for Africa? Last year I was interviewing Zahid Mustafa, the CEO of I&M Bank Tanzania, and he said that if we don't educate the upcoming youth, they will be more of a burden than a blessing to the continent. That's why we have Furaha today, a fintech democratizing school fee loans in Africa. By democratization, I mean that they provide education financing to the underserved communities, or better known as the invisible borrowers of the continent. They can send their kids to school and also help them finish school through Furaha. Thank you so much, Ian and Eustace, for joining us today.
Credit needs to be convenient. Credit should not be easy.
That design of how do you bring all these players together? How do you get the money directly at school? How do you write that as a loan to the customer?
While Furaha is at the center of this entire loan platform, there are about 9-10 different partners without any of whom this loan will not happen, right?
How do you think people from emerging markets, the youth of emerging markets, is going to catch on to AI, Gen AI in the next decade?
The global corporations and the large markets, those solutions can't just be superimposed in a market, in a country in Africa.
That you have now built Furaha. What is the biggest challenge you must have faced in enabling education financing of this nature in Africa? What might be the most unexpected challenge that you guys faced while building this brand?
The technology is not the biggest challenge, but the thought process of the product design. Because Furaha, we are simply a tech player in the middle, but we've created an ecosystem of like-minded partners to bring this to life.
Yeah.
So the whole thought process of how do you bring all these in, which is a first for most, in every measure, it's a first to have a platform that has 2 telcos on, a first to have multiple banks on, a first to have multiple credit bureaus on, a first to have all these guys coming together to solve one single problem is a first of its kind. So the biggest challenge we really had as a starting point was the entire design. Because at the end of the day, remember, the education use case is the first use case we've built for. And our intent was to meet the need. The intent has always been, we do not put cash in the hands of the borrower. We commit the money to the school directly because that's where the need is. The child needs to go to school, so we enable the child to go to school. So that design of how do you bring all these players together? How do you get the money directly at school? How do you write that as a loan to the customer was always, it was the most fascinating and challenging thing. But as they say, where there's a will, there's a way. We've cracked it. And we are really proud of what we've so far built as a very unique, complex platform that is able to distribute redundant, cheap cash sitting with the financial institutions and put it to use where it's actually needed the most. That was always our dream, and we see that impacting lives, we see that changing lives. So that was really, for me, that was the most challenging piece around the product design.
One of the statistics that Eustace quotes often is that for every $1, so there's research which shows that for every $1 spent on education, there's $17 unlocked across the life of the child who's benefited, right? So that aspect of doing something far greater than just giving a loan has been a very big driver in the way this product has actually come across. Okay, while Furaha is at the center of this entire loan platform, there are about 9-10 different partners without any of whom this loan will not happen, right? Now, normally when you end up into situations where you're discussing, you're trying to get people to buy into an idea across so many different partners, it's very tough where people tend to focus on what's my slice of the pie. as opposed to can this pie be made larger, right? But when you talk about something like education, when people are genuinely, which bank CEO, for example, is not pleased with the idea where they can have their annual report to say, by the way, we've dispersed $30 million of credit to the retail sector this year, but we've also helped to keep 50,000 children in school, right? And that cuts across all our partners, right? Right from SchoolPay, who has been very core and fundamental to setting up some of the platforms, to MTN, to Airtel, to our banks, Opportunity Bank, Diamond Trust, Cairo. All of these partners come in with a larger objective of saying we would love to be able to participate, but we also want to share in the larger good, right? So that piece about the partnership coming in, to be able to convert that 1 into 17 is something which has been very fundamental to the way Furaha has actually built this out.
So I was interviewing Vimal Kumar, the CEO of OmnisPay, a few days back, and talking about partnership. Talking about partnership, what he also said that he envisions the entire fintech ecosystem to be such that doesn't matter what the entry point is, you get access to all the fintechs or all the services as a whole. Like the entry point can be anything, but then partnerships have to be so strong in this ecosystem that doesn't matter where you get in from, you get access to all the services. So companies, brands, fintechs have to work together to make that happen. What is your take on partnerships today for this region, for Africa, MENA?
So in the banking space, right, both of us come in with 2 decades each in a large traditional international bank, right? In banking of today or banking of yesterday, a bank would love and clearly wants to do everything in the value chain. Right from identifying the customer, originating that customer, being able to provide every financial need of that customer, right down to that entire space, right? That, the point what you mentioned about partnerships, that is rapidly getting disintermediated. Okay, the space in which the consumer today will choose when they enter, they will choose when they stay with you, and they will choose when they leave. The point is, how do you keep yourself relevant to the consumer at every point of time, right? So, in economies like emerging Africa, the need to save, the need to invest is far lesser than the need to borrow. Okay. However, the willingness to lend is far lesser than the willingness to enable saving or investment. People are happy to give, and that's the ecosystem which exists today. People are happy to give $2 to 20 million people, than to give $500 to 1 million people. Okay, but $500 to 1 million will actually help those 1 million to build something of value. $2 to 20 million is not necessarily going to help. Okay, so the piece about partnerships is extremely relevant, but the partnerships need to actually help deliver the outcome.
Correct. So
Can I just add something there? So, see, this is not really just about fintechs. So the whole partnership, the whole shift to partnership is a paradigm that we have seen shift from the earlier days in the recent decades. And the key thing here is, can I stick to what I do best? And the earlier any organization realizes that, the better. So you look at what we've put together as an example. So for example, telcos realize that there can actually be a very good channel of sourcing potential customers. Why? Because they have millions who subscribe to them through their mobile network. But at the same time, they do not mobilize deposits. And banks do. So banks can avail balance sheet because they can mobilize deposits cheaply. But banks also realize that their ability to build cutting-edge technology quickly, swiftly, in their kind of regulatory framework, etc., is not going to be as fast as some of us as fintechs. So the whole point I'm trying to make is that partnerships are inevitable. No brand can go without them. Trying to build everything is a complete waste of time because your cost of building, your cost is always going to be high, your time to go to market will be much longer, etc. What then works for everyone is, if I can get it, if we cannot get into partnerships, each one of us bringing our own strength, and we have a technology platform in between that can bring those strengths together. It creates a win-win for everyone.
Yeah.
Because there is enough for everyone on the plate, as Ian explained. So for us, I think that's how we view it. But I don't think it's a new phenomenon. It's a trend we see everywhere. In our case, as I said, banks can mobilize deposits cheaply because they have a license to mobilize that. Telcos have customers because they have a license to get customers in, but they don't have a license to deposit. So, so the partnership conversation is that it's not new. The second thing you need to notice is that because the customer's entry point is in multiple places, they touch multiple places. You look at the lifestyle, right? I travel, I pay school fees, I buy groceries, I buy this. I'm still the same customer, and I'm touching multiple places. Which then means that I don't care. As long as I can get a service wherever I am, I don't mind. In the financial services world, that's why you now hear us talk about embedded financing. So let me provide financing as and where there is a customer touch point. And so partnerships have evolved over time. We continue to see that evolution. But I think what is coming out clear and what we like is the fact that all of us will play in a space, bring what we do best, and let the customer enjoy and have a choice.
You see how AI is catching on, how Gen AI is catching on. Like, the world is moving so fast. How do you think people from emerging markets, the youth of emerging markets, is going to catch on to AI, Gen AI in the next decade? How do you think they are going to deal with the rapid change, the wave?
Well, for the useless answer.
Unpredictable is the first thing I will say, right? Because you see, the way technology is advancing, it's very difficult to predict how different people are going to respond or use it. Having said that, of course, there are certain trends we see. The first thing is that, for sure, it is definitely changing people's lives.
Yeah.
From creating alternative opportunities, which are way different from the traditional path of either, work and employment, the way as it were.
Yeah.
So that we see. We see a lot of it, especially in the creative space.
Yeah.
The whole creative space is going to be very interesting, and it's going to grow exponentially, in my opinion.
The same point, and in fact, linking into your earlier question on AI, right? The global corporations and the large markets, those solutions can't just be superimposed in a market, in a country, in Africa. Right? I mean, I've spent a lot of my time in India, but I still, in my mind, will struggle to take 1 or 2 or 5 of the unicorns, or 1 or 2 or 5 of the large entities in India and just superimpose their model, right? The data, you take data, for example, from an AI perspective, it is about looking at data but knowing where it can be used, or knowing what is the unique data that a Kenya has, that a Uganda has, and being able to incorporate that into a model, being able to incorporate that into a decision process that is actually going to make the difference, right? So a lot of technology is also going to help the youth, the innovation in Africa to benefit from what's there outside. I also believe 10 years ago, for example, the ability for youngsters, for innovators to know what's happening in Silicon Valley, to know what's happening in Southeast Asia, to know what's happening in India, etc., was more limited. The ability to now learn from those, but to customize it to your own market is going to be immense. Right? So it's less about replicating what's worked elsewhere, but more about customizing it and building it in a manner that's very, very specific to what your problem is.
Interesting. And what about the lending culture of of Africa per se. How do you think it can improve? What are the policies that can change, and the pricing models? What do you think can improve in the lending culture of Africa?
So lending touches across multiple spaces, right? You've got regulators, you've got licensed players, you've got technology players, and you've got the end consumer sitting in the middle, right? I think Furaha is one good example where pretty much everybody's aligned, because the intent is not, Furaha does not charge the most that we can charge the customer before they walk away, but we charge the least that we can actually charge the customer while making a commercially viable product, right? And the reason why, from a regulatory side, from a stakeholder perspective, from a technology perspective, everybody's come together to do something that's good. Okay, so the culture has to also move to a stage where every entity in that value chain is trying to see how do they grow the size of the pie, rather than just taking a larger share, right? It's not about charging a higher interest rate because we can. It's also about charging an interest rate that we believe is going to help. If today 10 people are borrowing, can we have 20 people borrow tomorrow, because you're now making it more affordable?
Yeah. So scale, like volumes in terms of...
I think the one underlying factor we can't run away from is data.
Yeah.
One area that continues to shape and is definitely going to really change the entire landscape in credit for Africa is data. Availability of it or absence of it. Because all of us must, based on some data, to be able to advance credit. The baseline is starting to take place. Now, most of the African markets, as an example, have a national ID. Which is a great thing, and it's still evolving, but it's a good starting point.
Yeah, it's a very starting.
And as long as it keeps getting used as the source of truth, as the golden source of truth to link you to other things, it becomes a very good starting point. So data is going to be the first thing. The second thing is definitely education. So with the education taking root, with many children going to school, and you see a middle class emerging, then it becomes very much easier to approach such illiterate, well-educated kind of community. It becomes much easier to have a conversation around credit. Related to education is going to be financial literacy. Financial literacy is very critical, because there is this whole feeling that because I can access credit, I should access it. Not everyone should be accessing credit, right? So there is going to be an element around financial literacy, which is tied to the education. So one thing is education for people to move and get their lives better, but the other is actually financial literacy to understand how do finances work. That is going to be another building block. And then the final part is really availability of affordable capital. I think, and it's a chicken and egg. You can talk about high risk dictating the high cost of borrowing, etc. But what is really going to change is, once all these factors are in place, is accessibility of money that is affordable. Because, and as Ian said, because credit is on various facets. It's not just about individual personal borrowing. You're talking about SME space, which creates jobs. You're talking about big corporate borrowing. You're talking about multiple facets. But, it's got to only work when there is affordable money. That's what we try to do. In Furaha, one of the things we're very clear about, for example, from a pricing perspective, is why we've gone to banks to try and unlock part of that affordable financing to drive a social good in education. Because once there is good human capital that is well educated, these things you're talking about start getting unlocked. So I think, for me, that's how I see that landscape changing.
Thank you for watching, guys. This is Tech Behind It, powered by Yabx.